Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to be talking about day trading, more specifically gap trading, but we're doing something a little bit different today. Normally, I review the morning gaps, but today we're going to flip it over and we're going to cover what's covered in the second half of my course at Lazy Gap Trader, which is gap fill trades, because today we have a perfect example that was actually brought to my attention by a new member, somebody that recently purchased the course and is doing very well with the gap trading. So he actually brought this to my attention during the trading session in the morning, and it worked out perfectly, so I'd like to show it to you. But first, let's go over the gap trades this morning because it all ties together from what I'm going to explain later on the gap fill trades. So here's the email that went out to subscribers that get my gap trades each and every morning. We had three possible opportunities this morning: Dollar General, Kroger, and Diamond Offshore. And you can see the levels on the screen. None of them hit their levels, but we're going to take a look at them because it's very important so that you can get an idea of how powerful these levels are. Even when they don't get hit, you can really get a sense for there's something here that you really need to know in order to trade in the markets. So the first one we'll look at was already on the screen, Kroger, and here's a daily chart. You can see the level that was in the email this morning was $30.96. We didn't quite get there. I'll just move this over and you'll see that the low today was made at $31.09. We didn't miss by much, just 13 cents, but look where the stock is now as I make this video, up at $32.78. That's a tremendous bounce off of the level that most cases would have worked. Today it came up a little bit short, got front run a little bit, but nevertheless, look how powerful that price level is, how the market found that support level in and around that zone and had a price reaction, or the stock had a price reaction in the other direction, a fantastic rally off that level. We're going to come back to Kroger because this is the one I want to show you on the gap fill trade. But let's go over and take a look at what happened in the other two in terms of where their levels are as it relates to where the stock traded to. You'll see Dollar General, that made a low, didn't come as close, made a low of $70.59. So that was a little ways away, but look what happened after it found support in that zone. Look at the rally that ensued after that. So you can see the importance of that area. We're trying to pinpoint a price, and a lot of times we do, but even though that area is extremely important and obviously caused the price reaction in the other direction. Now, the last stock was Diamond Offshore, and we'll just take a look at that one for a second and then get back to Kroger. Diamond Offshore hasn't hit its level today, but there's still time left on the clock. So it's still an open trade. It's still a possible gap trade opportunity, even though it's past the morning hour. Let's go back to Kroger and take a look at what the gap fill trade looked like. Now we're on a 10-minute chart of Kroger, and in the second half of my course, I teach a second gap trading strategy, which is gap fill trades. So the first strategy is the morning gap trades that I show in most of the videos. And then the second strategy is a gap fill strategy. And that's what I want to show you here today. What we do is, and I teach in the course, is how to keep a running tally of all the morning gap trades so that we can come back and identify when those stocks are about to fill their gaps, because that creates an entirely another tradable opportunity. So let's take a look at what happened with Kroger today and let's map it out. So the prior trading day's close was right here. Okay, this is the close on the 30th of November. This is the opening, which is this morning on the 1st of December, and the stock gapped down at the open, down in this area here, came short of our level where we would have been willing to buy the stock, creating an opportunity for our morning gap trades. It came up short and the stock rocketed higher, and then look what happened next. The stock rallied all the way up to close a gap left open from a couple of days ago, and then immediately pulled back from that level, creating a nice profitable opportunity. The gap was at $33.08. It was filled. We went as high as $33.22, not too much over that gap, and then came back, and just 20 minutes later, we were at a low of $32.51, creating a nice, quick profit, low stress, profitable opportunity. This is the second strategy I teach in my course. How to find these gap fill trades, how to trade them, which ones work, what are you looking for, what not to trade, How the stock comes into a gap fill is as important as the gap fill itself. Sometimes we don't want the trade. It all depends on how it comes in to fill the gap, and all that's discussed in the course. So in my course, you get 2 gap trading strategies: the morning cap trades and gap fill trades. I'm David Frost, LazyGapTrader.com. Thanks for tuning in, folks.